awesome.
It is awesome. It's Thursday morning at 10 a.m., so it is awesome. Welcome, everybody, to Real Estate Now. Stacy, good morning.
Good morning. I think the sunshine makes us loopy.
Yeah, no, sunshine is good. I'm happy right now because with how this lines up, and next week with daylight savings time coming, we're going to be an hour further, so the sun is going to be like right through my window. I'm going to be blinded at 10 a.m. next Thursday. So this is just our PSA for everybody to make sure on Sunday they set their clocks back. So we're springing forward. Yay. Or no, set the clocks forward. Sorry, not back. So jump forward. And we're almost to springtime. But yay. So before we jump into our show, we're going to be talking about insurance, the things to do with your homeowner's insurance, things maybe not to do with your homeowner's insurance. But before we jump into today's topic, we always talk about our favorite mortgage interest rates. Interest rates going up, interest rates going down, just our little knowledge nugget here every week, talking about the environment that we're finding ourselves in, and we're still ticking up a little bit more as far as the rates are concerned. So we're just over 3% on the 30-year fixed with a little bit of fee there. 0.6% to your closing costs as far as the discount are concerned. So we're trending up. We're trending up. We may find a plateau, maybe. I don't know. Now that the stimulus package has been passed and all that good stuff is starting to wind down, hopefully we'll find some stability in our rate environment and go from there. So that is this week's update on the rates.
Not a volatility still, but still super low. So a great time to buy or refinance.
Amazingly low. Yeah. So I was just scrolling through the last time. Well, in 2008, we were at 7%. 2008. So 12 years ago, 13 years ago, right? Awesome time. Still an awesome time. Don't hesitate. Lots of folks are out there making an application. And I do want to say this really quick before we bring in our guest, Thomas, today to talk about insurance, is with this increase of rates, people are thinking, oh, it's not a good time to refinance, or, I'm going to go jump into the buyer's market because there's going to be fewer people. I'm telling you right now, the folks that were on the cusp, as far as refinancing are concerned, they're jumping in. They're like, oh my gosh, rates are going to go up. I need to lock in that low rate now. And then the folks that are looking to buy, they're like, oh, I need to buy before rates continue to go up. So there's created a new sense of urgency, folks, that yes, it's a great time to buy, but don't be fooled out there that, oh, right now there's going to be less buyers, there's going to be this or there's going to be that. This small increase in rate is not slowing the buyer pool down. I think right now my team is up to 10 pre-approvals this week. That's 10 new applicants coming in. We usually average about 5 a week, 1 a day, right? So we're doubled our average as far as getting people pre-approved. So the buyers are still out there. Don't be thinking that this is the end of the real estate market, because it's not. It's very much a hot market out there for buyers, and sellers still looking like it's your market. So wear that crown as long as you can, baby. So
when it turns on a dime. So ready.
It does. So without further ado, we want to bring in our guest today to talk about homeowners insurance and what that means when you buy a home. Thomas Buck with Montlake Insurance.
Yeah, that's right. Montlake, like the neighborhood where University of Washington is located.
And you have the iconic Montlake Bridge as your logo, which I think is brilliant because I love that bridge, as long as I don't get stuck on one side or the other.
That's right. It's a good time here.
I might be making this up, but I think my mom's very first car crash was on the Montlake Bridge. I think when she was like a young kid.
Yeah.
I'll ask her. But yeah, everyone in Seattle loves the Montlake Bridge, so great choice, Thomas. But welcome. We're glad to have you here.
Yeah, thanks for having me.
Yeah. So tell us a little bit about yourself and your company.
Yeah. So I am originally from the Seattle area. Grew up on Queen Anne Hill. Went to the UW and live in Northeast Seattle currently. So really haven't branched out too far, but been in the insurance industry for almost 10 years. Opened Montlake Insurance Group last year. Worked with a friend of mine previously, helped him with his startup company, a similar brokerage firm. So kind of learned how to do it. Was there for about 4 years, but then opened Montlake last year, so about 12 months ago. But it's been great. It's partner with a variety of insurance carriers, so really a brokerage model. And each insurance carrier is unique, just with the products that they offer, the type of coverage that's included within their homeowners policies. So I just enjoy working with homeowners. I'm a homeowner myself. I've dealt with claims personally, dealt with a lot of client claims. So I just have quite a bit of experience just with understanding, what types of things are covered by certain carriers, what types of things are excluded. So I just, I hate when people learn about insurance on the back end at the time of a claim. So I just enjoy working with people on the front end just to take time to really understand, hey, what types of things are, covered or not covered by policies? How can we tailor this to your specific needs, your specific home, and make sure that it's a good fit for you? And also just price competitively, because each insurance carrier will offer, coverage for pretty much any home out there. But if it doesn't fit into their box, their kind of target market, it just won't be priced very competitively. So I think it's just a matter of kind of determining what coverage people need on the front end, and then reaching out to different companies to see, which carrier will be a good fit for what you're asking for what the client needs. So.
Yeah, let's talk about the business of insurance, right? So there's really two ways or two different types of insurance producers out there. There's the captive agents, and when I say captive agent, I'm talking about your State Farms, Farmers, American Family, those guys, right? So they're selling their product, and then there's brokers like yourself out there, and you're selling a bunch of different insurance carriers' products. Tell us a little bit more about that.
Yeah, so State Farm, Farmers, USAA, Allstate, they're all great insurance companies. They fall under that captive model. So people that work for those companies are only able to sell or represent that one particular carrier. Broker is just a little bit of a different model. The companies that we partner with, like Safeco, Pemco, MetLife, Nationwide, Travelers, they kind of take a different approach, and they sell their insurance products exclusively through brokers. So essentially they give brokers the ability to go out and find clients on the insurance carrier's behalf, clients that'll be a good fit for that carrier. And so we kind of do some underwriting on the front end just to find clients that are a good fit for that company, then bring them back and kind of, match the two together. But sorry, just having a little bit of a connection issue.
No worries. You're sounding good.
You can't do both, right? Like, is that what you're saying? So if you're, whatever the companies you broker to, like a MetLife, for just example, like a consumer couldn't just call them direct.
They could. And so that's a good question.
Okay.
I think what the broker saves the client a little bit of time. The client could reach out to each of these companies directly. They all, have direct sales agents that work for them. I think the important thing to keep in mind is that the pricing that a client would get by reaching out to Safeco directly would be the same as if they work through a broker. So I think the value that a broker adds is just, experience, just understanding the types of coverage that are available. And just the ability to reach out to all those companies just saves the clients a little bit of time. And, if they had to do that themselves, just kind of adds a little bit more to their process, especially if they're closing on a home. Typically they'll have a lot on their plate. So it can be a little bit of a relief just to have some assistance with something that may be new to them. People are first-time home buyers. It can feel a little bit overwhelming, I think. So just being able to...
Just a little.
Yeah. So just being able to educate people a little bit. Yeah,
it's so important, but it's like people don't talk about it enough, right? They just grab insurance right before closing. So it's important to do your research.
Yeah, and I think insurance feels like a little bit of a commodity. A lot of people buy it online and they think it's, kind of an off-the-shelf type product. But I think it's important for people to remember that it really should be tailored to your specific needs, your specific home. And there are, lots of optional coverages that really aren't very expensive to include. But I think people just don't consider them. Like, you can insure your sewer line through certain carriers, water backup coverage, earthquake coverage, flood coverage. They're all sorts of kind of ins and outs of insurance policies. And I think people are just kind of surprised to learn that certain things, aren't included in standard policies. And I just try and take an educational approach, just letting people know what's available, kind of understand their risk tolerance, and then, kind of tailor a policy accordingly. So.
Well, what is your process right now in COVID times? I don't know if you're meeting people at the office or what have you. Are you doing a lot of Zoom meetings to help this education, or how are you guys getting in front of your clients?
Yeah, we conduct a lot of business over the phone, and yeah, certainly utilize Zoom to connect with people. But typically we can conduct a lot of our business just remotely or over the phone. Don't have people walking into our office typically to purchase insurance. I just primarily get connected with the folks either from their real estate agent or from their mortgage broker. And then we'll reach out to them. But I have a pretty standard process. I think it helps, whether it's mortgage or real estate or insurance, to just have a repeatable process that can consistently work through your steps, just to ensure that you're, touching on everything. But yeah, I typically start out with an introductory phone call, kind of get an understanding for, what the client needs, then structure an insurance policy, reach out to all the different carriers that we work with, and then kind of report back with my recommendations. And that whole process takes about 24 to 48 hours. So I just try to impress upon the clients that it's not, I think people think that, with buying insurance online, that you can just click a button and, a rate will pop up. But I think with something as important as a mortgage or, buying a home or insurance, I think it's important to take some time to work through it, do your diligence. And I think with important decisions like that, you don't want to just click a button and get something produced immediately. You want to take a little bit more of a thoughtful approach with it, I guess. So,
well, there's all those ads without saying company names of call, just give us 10 minutes and, we'll take over your insurance. So ads, our favorite ad in the middle of the night with Jake, who, if somebody has an emergency in the middle of the night, are you Thomas Buck?
That's a great question. So
I 2 in the morning? Yeah.
I would like to tell my clients that I'm available 24 hours a day, 7 days a week, but I think my role is really to just kind of provide advice on the insurance end, help people find policies that are a good fit for them, making sure they're priced competitively. But insurance carriers do have claims departments that are open 24 hours a day. So in an emergency, and I think of insurance, it's more to help with the financial side of things on the back end. It's not your first call isn't going to be your insurance carrier. If you have, if your basement is flooding, you'll want to call, like a company like ServPro or, water remediation company to address that issue. And then insurance will be there on the back end to kind of help deal with the, financial side of things. But that's just another part of it, educating people so they know who their first phone call is going to be in the event of a claim. Most people, don't deal with insurance all that often. So I think just kind of coaching people, giving them, clear expectations of, what they should do in the event of a loss, just helping guide them through that process, when it does come up.
What states are you licensed in, Thomas?
So just in the state of Washington at this time, probably get licensed in California within the next few years, but don't have a ton of clients out of state. So just focusing on Washington for the time being.
Focus local. So I want to go back, and you kind of hinted at it a little bit. Tell us in your experience, what are the 2 or 3 coverages that people just by default think are part of their homeowners insurance, but really aren't?
That's a good question. So I think earthquake is probably the biggest one. Earthquake coverage is excluded by nearly every homeowners insurance provider out there. Certain companies allow you to include it, but it needs to be added in. It's never going to be just a default coverage that's included within a homeowner's policy. There are.
How much can someone expect for earthquake insurance?
For earthquake coverage, it really depends on the area. Like I've done a couple proposals lately for folks over in West Seattle, and it's just interesting how rates really change based on the location of a home. So my understanding is that West Seattle is kind of a high risk area in the event of an earthquake. So it's just priced accordingly. So we work with a carrier called GeoVera. They're a specialty residential earthquake insurance provider.
What's a low risk area, Thomas?
That's a good question.
Where
better
should we be
understanding
looking to live? Is it okay? Are we North Bend? Where do we need to go?
That's a good question. I think there's all sorts of actuarial data that goes into it, and I wish I had a better understanding of that stuff. But it's just interesting. You'll do a proposal for 2 pretty similar houses. One might be on Capitol Hill. One might be in West Seattle, and the West Seattle property might be $3,000 for earthquake coverage. The Capitol Hill home might be $500. So
and that's annually?
Yes.
Okay. And what's your percent of, you would say, of your clients that are getting earthquake?
Not many. So I don't purchase it personally. I try not to persuade people to go one way or the other. I think it's just important to know that if you don't carry earthquake coverage, in the event of an earthquake, you really are going to need to pay for any repairs out of pocket. So that's, kind of comes back to risk tolerance. Like, are you okay with that personally? And also, I think one other important thing to keep in mind with earthquake policies is that they always incorporate fairly large deductibles. Like within a homeowner's policy, typically you'll have $1,000 deductible. That's something that you can choose, but typically I recommend $1,000 in those policies. But with an earthquake policy, and I think this is just so a carrier can remain solvent, just able to pay claims. If a huge earthquake hits, they're going to have 5,000 people filing claims simultaneously. So I think just in order to make sure they can pay all those claims, they incorporate these large deductibles within the policies. So you might see a deductible like $130,000 as opposed to $1,000 for a home policy. So anyway, sorry, to answer your question, Stacy, I'd say maybe between 5 and 10% of our clients that are homeowners purchase earthquake coverage. And I think just because it is something that's optional, not required by lenders.
Kind of a fascinating just knowing that we're kind of an earthquake country, right? Like we all talk about it. We know where we live. It's not somewhere that we're not expecting earthquakes. So we have a lot of tolerance for thinking we're going to rebuild our house with our own cash.
Yeah, and it's kind of a scary thought, and I think some people maybe just don't think that it's going to happen. But a newspaper article will pop up in Seattle Times every once in a while, and then we'll start getting calls on earthquake coverage. But I think that large deductible kind of scares people away sometimes. They start thinking, am I ever really going to, am I ever going to need to use this policy? Is it ever really going to bail me out? But they really are designed for catastrophic type earthquakes. That's the way that I think of earthquake insurance is, when the big one hits, that's really why you'd choose to buy a policy like that.
So what else do people not realize isn't covered?
Yeah, I think flood is the other one. I think the term flood is pretty misleading. People think, I don't live next to a river. Why would I need flood insurance? But the definition of flood insurance is really just if water seeps into your home from an outside source. So a few years ago, there was one day when there was like 3.5 inches of rain in Seattle. The basement in my house in Seattle technically flooded. So there was water, seeping in through the side of our house, and it turned into this huge project, just ripping up carpet, drying out the basement. These huge fans, had to call, water remediation company. And so after that whole, after all was said and done, it was maybe $8,000 to take care of all that. And my homeowner's insurance carrier doesn't offer flood insurance. So I would need to go purchase that separately. So we paid for that out of pocket. So that was kind of a learning experience for us. But, lenders will require flood insurance from time to time. The whole state of Washington is mapped. So there are certain areas where it's a high risk flood zone. A lender will require flood insurance in that case. It doesn't come up very often, but I think that's just something important for people to keep in mind. If you do have a finished basement, I think important to just keep in mind that, a flood, technically water seeps into that basement, going to be excluded by most homeowners insurance policies. But there are carriers out there that offer that coverage, and there are homeowners carriers that can allow you to incorporate that within the home policy. So just one way that you can kind of tailor
your. That's a really good comment, really, because I think a lot of people only think about flood when we or someone tells them they're in a flood zone and we require it.
Right.
So I would not have thought of getting flood if I wasn't in a zone. So yeah, but I know many people whose basements have been flooded by rain.
And that one particular event or one particular day a couple of years ago, I think a lot of people learned at that point that, flood isn't covered by their home policy. So there are lots of people in our neighborhood that were dealing with that issue. And they all call their, homeowners, either call their carrier, their broker, and they're all finding out at the same time that, flood is not something that's covered. So,
because if you had the same damage with like a pipe breaking, you would have covered it, or your insurance would have covered it.
Yeah, so if it originates from inside the home, typically it's always going to be covered. But if you read the fine print in those policies, there are so many different types of water damage kind of classification. If it backs up from outside the home, that's considered one type of water damage. If it seeps in, that's another. That's flood. So water is just a tricky thing within homeowners policies. So I think that's one thing to really pay attention to, just how that's defined and kind of what you're taking, what steps you're taking to mitigate that, on the insurance end from that perspective.
Yeah, and I think back to Stacy's point, and I had a very small stint in insurance myself. Yeah. People have this perception that they have to be in the flood zone to get flood insurance. So that's a great takeaway, that you don't need to be sitting right next to the river to get a flood insurance policy. And if you're not in that flood zone, tell us, I found it very affordable. Is it still an affordable policy if you're not in that flood zone to have flood insurance? It
is, and you don't need to buy the same amount of structural coverage as you would need on the home policy. You can buy smaller amounts. So you could purchase $25,000 worth of flood coverage, and that might be, $100 a year to purchase that. We have one particular carrier that we work with that just offers flood insurance. They're a private flood insurance carrier. But you can also purchase it through the National Flood Insurance Program that's part of FEMA. So a couple of different options on that end, but more of our carriers have started to include the option to add flood insurance into the home policy. So Safeco, for example, has a really strong homeowners product, in my opinion. So they give clients the ability to include that within their policy. And it's maybe $30 a year to include that within a home policy. So I think people just don't know that that's available.
Yeah.
So, but also other carriers, don't give you the option to include that. So I think it's just important to understand that each carrier, the products really do differ from one company to the next. It's not just pricing that differs. It's kind of the optional coverages that they provide. So, but yeah, I think Safeco's a great company in general, and just a strong homeowners product.
Great. Well, hey, we're getting close to our half an hour, so I want to give you one last question that comes up all the time.
Okay.
And they usually call me about this, and they're like, Keith, I appreciate you hooking me up with Tom. He gave me this insurance policy, but I'm buying an $800,000 house, and I think Tom might be like loose in the caboose here because he's giving me a homeowner's policy for $500,000.
Yep.
So can you walk us through how you guys are coming up with that number that you're putting on the homeowner's policy? Because so often clients are like, oh my gosh, I can't believe it. $800,000 house that I'm under contract for that's only got a $500,000 policy.
Yep. That's a great question. I get that same question pretty often as well. So homeowners policies are intended to ensure that the structure of the home. They don't insure the plot of land that the home is built on. So the market value of a home, if it's $800,000, that's the combination of the land value and the structural value. So when you're putting together a homeowner's policy, you may only insure it for $300,000, and each insurance carrier has their own proprietary program that they use to calculate that number. So a broker or agent like myself researches the home, inputs all the information on the particular home into the carrier's program, and they come up with that number. So it might be $350,000, and that number is probably going to change a little bit between each company. They all have an opinion of what it would take to rebuild a home in the case of a total loss. But yeah, I think just
does that number change? Sorry to interrupt. Does that number change like annually? Like as
it typically increases by maybe $10,000 to $20,000 each year automatically, just to keep pace with inflation.
Okay. So if someone's had a policy for 5 years, they don't need to be worried that it's not going up with the value of
I think the only
lumber or whatever the cost to rebuild a house.
Yeah, so it'll just increase automatically. So if you look at your renewal, that dwelling coverage will go up, like I said, between $10,000 and $20,000 each year. But really, after you set up the policy initially, I'd say no reason to really make any major adjustments to the policy unless you've done major remodel or added additional square footage. That's the only time that you would really need to make kind of a major adjustment on the dwelling coverage. But if you don't touch it, if you kind of leave it as is, it will keep pace with inflation year to year.
Awesome. Yeah, that's always that tricky question. I'm like, oh well, I'm pretty sure they do a replacement calculator, but why don't you check back with the insurance carrier?
Yeah, and carriers they'll produce a report for you. So if clients ever ask for that, like how do you come up with that number? There is a document that they'll produce that shows exactly how they came up with that amount of dwelling coverage. So it kind of gives the homeowner a little bit of peace of mind, saying, okay, here, that information is all accurate. Number of bathrooms, square footage, number of bedrooms. Like, okay, this makes sense. That helps me feel a little bit better about how they came up with that number.
Awesome. Well, thanks for bringing clarity to that.
Yeah, that's a great question.
Thomas, Montlake Insurance Group. We threw your URL there here in the chat group or in the chat box. So if you guys have any insurance questions, definitely reach out. You guys are open and available here, especially during COVID times. So don't hesitate. Thank you so much for joining us today.
Yeah, no, thank you for having me. And if you have any additional questions, please don't hesitate to reach out. Sounds great. Well, have a great afternoon. Enjoy the sunshine.
I mean, 60s by the weekend, you guys. 60s by the weekend. So, we'll see you later. Well, there you have it, folks. Don't forget to ask about those earthquake coverages, those flood coverages, and understand how they're valuing your property. as far as replacement cost is concerned. So reach out to Montlake Insurance Group. They are here for you. We'll see you next Thursday, Stacy. Are we talking staging next Thursday? Is that what we're doing?
Yeah, we flip-flop the shows. So we did a commercial a couple of days ago. Maybe we'll do Thomas's commercial next week, and then we'll surprise you later in the interview.
So this is called pivoting. We pivoted, right?
Thank you, Thomas, for pivoting with us.
Yes, exactly. So right on. Well, enjoy your guys' week. We'll see you next Thursday. And remember, we're springing forward on Sunday. Have a great week.